Hey everybody, welcome to October 16th Principal Profit Trader Coaching Call. We're going to get right into it. So let's just go through different aspects of what we possibly thought tomorrow could bring, and then we'll just zoom out to see if we can get a better idea of where we are in a larger time frame. But for tomorrow, right, let's go over a few things, right? This is where the candle closed yesterday, right? And we didn't get any action reaction on this particular candlestick pattern, right? So that candlestick pattern is bearish, right? There was no action reaction and we closed heavy. So for that candlestick pattern, you would write, bearish. That would be sideways down, right? Now, support, right? Closing here, we are at the bottom of 1, 2, 3, 4 day confluence, and we did have a little bit of action reaction. So there is some energy. But remember, we're not anywhere near the lows or the middle of the tail yet. But yet there's 1, 2, 3, 4 days worth of confluence. So there's a possibility that we could have some type of reaction there. So for the support resistance category, the edge goes to support, and I would say that sideways up. Right. So far we have one bearish and one bullish. Right. Now we're going to go into dog leash. Right. Dog leash is sideways down. Right. Because it pulls all the way down here. Okay. Beauty principle, I had sideways because around this level we were just 1, 2, 3 sideways, 1, 2, 3 sideways, and we really hadn't done much after we kind of came down sideways. So I consider this the candlestick that we would go sideways around this level. So beauty principle, I had sideways. That's our first neutral category. So we have one bearish, one bullish, one another one bearish, and the beauty principle neutral. Right. So that's 1, 2, 3, 4 categories, right? Right. The prior momentum, right? We had so on this day, right? The prior momentum was up. On this day, right? The momentum would be down. Another bearish category. Okay. Then we're gonna do we did dog leash, we did no, we didn't do moving averages. So it's not really at a moving average. So a moving average one, since that category is for support and resistance moving average, not like how a beauty principle would associate with it. I'm going to mark that one uncertain because it's not really near anything, right? Obviously, if it comes up towards up here where this moving average is, it's resistance, blue resistance, and then purple would be support. But we're not near those, so you don't really have to mark it as such, right? So beauty principle. I'm sorry, dog leash I had down because we hadn't touched the moving average in a while. Up here, kind of sideways, right? So now zooming out, we can go to a higher time frame category. We'll go to the weekly. Okay. Weekly, I also have sort of down because beauty principle, right? And the monthly, right? A little bit, this is a pretty nasty indecision candle. All right. This is, this represents a megaphone pattern. And I said this was a place to take profits. I said that because we were close to the 100% range up here. So that is a profit taking zone. Right? Probably heading towards this this high volume node here, right? Which would correspond with the bottom of this hammer, which is sort of where we launched out of that balance, right? And we're not surprised we're having down days. I mean, we have bearish stochastic. So the monthly is also sideways down. I'm doing this from memory, so let me just pull out the daily call sheet for everybody. Okay, so we did support. We did okay. Leg count, right? We got to do leg count. That's one we missed. That's a big one. CCI, right, and leg count, right? Besides the intuition one. So let's go. I like to see leg count on the daily. Let's save that. Right. I marked this down because of the stochastics. We don't really have anything developed here for a reversal. Um, Prior 100% range, you take profits, it goes down, so on and so forth. Now we'll go to the daily. Okay. Well, you can see leg count. If we just count, let's just get a little bit more data. Let's get rid of this. I mean, clearly, right? We've had a strong bear, right? So if you count up all these legs up here, and we even do 100% of the range we broke from, right? The leg count is, even up here, right? Up here, leg count definitely for reversal. Down here, right? You're near support, but that's not what the leg count is. You're still, right, in an area where you're overextended, right? And unless there is the beginning of a new leg, some evidence, then you're still in this. So I would also mark that one down. And that leaves CCI. Not anything crazy like a zero line reject with some overshoot, and there was actually some red here. So that one you could mark uh, sideways to sideways up. In hindsight, then we did moving averages. We said uncertain. So if we go back and just look at this day, and I'm trying to not do this in hindsight because after the candlestick happened, I mean, this support maybe didn't deserve me to weight it as high as it did based on everything else that I'm looking at. But even if I gave it a times two for support resistance, that's still a lot more bearish than bullish and one neutral. You got a bear, two bulls, another bear, a neutral, a bear, and uncertain. Um, and then bear, 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 and then neutral. And then how do I feel about being long? Well, I probably felt pretty good because I went long. And how do I feel about being short? I guess at that point near the support, I didn't feel too good about it. So that's kind of why I basically went one, two, three. Well, it's not how do I feel, it's assume being short, right? It's a tough one, right? Because there was support there. There was, I mean, sideways would have been a better call given how the candlestick pattern, and how heavy that closed. But we're at a very tricky day. We're at an area where even though we, like I said, we have a buying tail. This candlestick, like I said, and the other day, is a higher ratio. Like if you measure the length of the body from here, and then we take the price from here to here, which I've already done, the ratio from the wick to the body is 10 to 12. That means the body is longer than the wick, 6 to 5. And I didn't take it right from here. I cheated a little bit and took a little bit of the high wick up here, whatever. The point is that I did that to remind myself, I was like, don't just think of this as a buying tail because this is a balanced breakdown launching point of direction of the conviction candle. And anytime we came back up into that resistance, there was going to be people that were selling because they got so wrecked before. And there's a lot of resistance up there. A lot of people selling at break even. Okay. So I'm not surprised we came back down here. That dog leash on that 200 was definitely calling us. But yeah, we took it on the confluence of the 1, 2, 3 day support. There was an intraday double bottom. So there was definitely smaller time frame things that were preventing us. Now, going forward towards tomorrow, we can redo a few things, right? The dog leash now is not going to be sideways down. It's going to be sideways because we already hit it, right? That means that longs are on the table for that category. It gives a little bit more boost for edges for longs. What else would change? Support and resistance was broken, but we are at a moving average. So moving average would go from uncertain to bullish to sideways up, right? Because you're on the moving average. Depending on how we close, right? You could have, if we get a little bit of an action reaction, the prior momentum, right, could be up, but if it closes like it is, it closed down, so the momentum's down, right? Support resistance, anytime you're halfway between a buying tail and the low, there's going to be buyers halfway, even really on all time frames if you think about it. And so for that, I would give the edge to the bulls for support and resistance for that category. Now, beauty principle might be a little bit different. I'm no longer looking at how it behaved here because that idea has been invalidated. We're going to look at how price behaved around the 200 purple moving average. We were right on it. So you can see here, beauty principle last time did not need to touch it to attract buyers. That's why not needing to touch it, not needing to touch it. That was, a proper beauty principle, seeing how it behaved here, right? But now that we penetrated it and then retouched it, let's see if we can get something like that. Didn't need to touch it, didn't need to touch it. Came back down, touched it, broke it, right? Here's interesting, right? We touched it, went up straight, came back down into it, came back up again, right? But the yellow also marks us as having some overshoot, right? Which is kind of what we did. Went up the yellow, it had some overshoot. So watching how price behaves around the 200 moving average is important right now. So we know for sure that it's not going to be sideways down for that category. It's going to be most likely sideways or sideways up. The only thing that it wouldn't be would be down because every time it came there on first test, there was a reaction or it went sideways, reaction up. So, okay, let's do CCI for tomorrow, right? If it close, assuming it closes exactly like today, CCI for tomorrow is also kind of not really giving us a signal. I would mark that one uncertain. So assume being long, assume being short. I do like the idea of going long at this moving average. So how do I feel being long? I feel okay because there was a buying tail. How do I feel if I'm short? I feel pretty good short because I'm going to be taking profits here. If you shorted on any of these pops and you came back into this moving average, you'd want to take profits. So better odds for longs tomorrow than for today, although using, the quad exit, we'll go on the lower time frames now to show you what we did. Right. So where was our trades for today that we took, our signal we gave? As it was coming up here, I said, hey, if it comes back down until initial support with this little buying tail here towards the end of the back of the zone, a couple days there was a little bit of a zone of confluence here, and using the quad exit, when it came back down in here, we went long, and this was at 9:45 and went up here. We took half off. It was like a percent at that point. Obviously, when you take half off, you don't go all out, you don't get the full percent, but that's not a bad pop on a financing point, right? And the most important reason we did that is that, you know, there was resistance up here, and there was, maybe a sideways up was a little premature given everything I just went over in a more calm way. There was certainly a lot of bearish factors. Well, maybe sideways at best, but you can see, right? Bam, that is what happened. And I didn't wait. My original target was at 738, but why wait for that? The risk reward is not there, right? So taking half off there was one of the best exits I've taken recently. I haven't really traded in a while, execution wise. And then waiting for the action reaction. And then once this broke, I already imagined if that scenario happened. Luckily, I took half off, and this was a winner and not a loser. Now we don't get involved right now because as this came up here, this could have bounced down further because this is technically now a balance that broke, right? You could say, oh, that's the mini balance and we've already went 100% of it. Yeah, but I was looking at this whole thing and, seeing there wasn't a lot of edge here for me to go long when we're not near the bottom of this buying tail, which I have as a zone here. Now you might say that, okay, well, isn't there a body candle here? Yeah, I could have. I almost redid it where I put a zone here, right? And then that would give me leeway to have a smaller zone here instead of one fat one. And that would have been okay too. Like something like that would have been a little, right? Okay, but still, was this a great edge? I mean, clearly I didn't want to go long after that broke because there's other factors involved. I mean, just look at who's in control of the day. I mean, every market was red, right? So, and not just like sidewaysy red, some up, some down. Maybe this is like there is sustained momentum down, right? So I don't want to fade, you know, against what would be considered a trend down day in these other markets. Now, yeah, you got something here, whatever, but still, like once this broke, I wasn't super interested um, in getting involved again because I'm telling you, in conjunction with your daily call, which is your planning ahead of time, which I do, you want to look at what is happening in real time so that you understand how to apply the daily call. You're doing your rules, but you're also saying to myself, well, you know, all right, this I was sideways up. I went long. I didn't go short. Fine. Now the call is invalidated. You have to wait for what to go long at a wide double bottom. But do you just constantly follow your call, or do you take in new market information once it's available to you? I said once this broke the balance here, it would be a bearish day. Plus, we have other real time factors that were against longing, like the other markets were down, right? The intraday bias, who's in control of the day, was down for Bitcoin, and there was sustained momentum down after this because we had a balanced breakout pattern. So there was less odds given the day to go long again here and get something out of it. Now you could have scrapped and maybe scalped a little something out of it, but I mean, it's the risk reward's not there once I know who's in control of the day. You got to think in terms of timing. Now maybe if we bottom build here, and we might have another leg down. You know what I mean? I don't know. We have to have a pause day, and like I said, not every setup is a pattern. I'm sorry, not every pattern is a setup because a setup requires you to have certain, reward to risk ratios in place and other factors of confluence stacked together. Even the daily call is a confluence system. We're not just looking at one thing. Now, I may have had a little bit of a blue car syndrome this morning with a sideways up kind of an energy because I didn't fully do the call the night before. There was support. Hey, we're going to go there and slowing it down and really going through these things, right? There was certainly a lot more down calls than up calls, even for today, given these other more esoteric ways of looking at the market rather than just trend lines and support and resistance and so on. Now, adding in a couple of things here, right? This prevented us from, like, once this broken, to go long again. Now, maybe at this point you missed my first entry and you wanted to go long here, right? Now, keep in mind that once you got this and then you got such a straight line reaction down, that's kind of letting you know, like, hey, that's pretty weak. Whereas this had a strong buying tail and it spent a lot of time up here and then kind of took a little bit more time to come down and then had a hammer candle for an extra edge. And that was the first test of that double bottom. Now you got it. And there was already higher time frame, like I said, through the daily call that we just did together, a little bit more bearish factor, quite a few more bearish factors than bullish. Once you got a mediocre reaction from your zone, don't get aggressive and go long again. That was my thought as to why I didn't go long again once my entry point was stopped out at break even. Because I got what I got out of the day, and I'm kind of implementing a new rule just for my own psychological and emotional health. That, like, maybe I take one trade a day. Try it. Try the one trade a day rule, and you will probably end up with a more profitable edge overall, even if you miss a few things, because you're not going to take a boatload of trades in a day and it's not just like I take 14 trades and I only lost a small amount or I'm around break even and that's fine, right? It's like there is this thing called emotional capital and opportunity cost, right? Don't you want the greatest bang for your buck when you sit down at the screen and give up your time? It's not just giving up your money, it's your time. That's the main thing. That's the main edge of this high frequency, or not a high frequency, but the main edge of this intraday day trading, swing trading strategy, right, is the frequency edge, right? It's not just what is your accuracy on your trades. Like over your next 100 trades, are you 50%, 60%, 70%? Like what are you? It's not just your accuracy, it's that multiplied times your risk reward ratio, right? What your winners are. Basically, it's your percent winners times your average winner minus your percent losers times your average percent loser. That'll give you your expectancy, and then once you get that, you can multiply that times your frequency of how many times you trade to get your edge. what is your average win per trade times how many trades do you take a year? That can give you sort of a prediction of what a strategy could, like if you kept up your recent winning streak, if you went like, if you go over your last 100 trades and you're up quite a bit, you can use my expectancy formula to project out if you kept up that edge, what you would expect to make. I mean, it's very empowering because you can see, I don't have to trade every day. I'm in control of this thing. I really have an edge here. When I'm ready to go, I'm ready to go. And that's how you march on. So like I said, in crypto, there's a whole host of other things that you have to take into consideration. And one of those being your state. Like prior to me doing this coaching call, I was unstaking my LTO, and it's not an easy thing to do because it's not straightforward. It's like on this Telegram web wallet connected to a ledger, but then you got to go to this website. So I had my guy help me do it, my advisor, tech advisor, for every blockchain issue, every transaction on a blockchain, every transfer, every unstaking. I mean, for the most part, if there's problems. And of course there was, because as I'm doing this, I'm refreshing my ledger on this particular ledger. And all of a sudden my Polkadot went gone. I'm like, what the heck? And it was like one of those things where I had to wait to refresh it and then um, update the firmware for it to resync. But it's like, man, like I just unstuck something, unstaked this thing, and then it shows that, you know, my ledger is missing a bunch of Polkadot. All my Polkadot was gone, and that was a huge bag last bull run. It was like well over 100K. It's worth not much now, but it was worth a lot uh, last bull run. But the thing is that you know when you have a blockchain issue, it can rattle your nerves. So it's like this game is like, how well can I calm my nerves? Because I had to like calm my nerves. I haven't been able to execute in a while. And today was the first day I was able to execute in a while. It wasn't like a class A setup. It wasn't a huge trade, but it was thought out, executed, felt the fear, went into the rhythm, did the super performance morning routine, and then hit it. And then it turned out to be a winner. Right. And that's just me knowing that I had to, or for everybody knowing like, okay, when should I trade and when do I not trade? When should you trade is a combination of I feel good, I'm thinking well, I'm feeling well, I got swag, and there's an opportunity cycle. There has to be two, right? Usually, what happens is that people feel like crap when there's an opportunity cycle because they faded the trend down on the whole way and then they have no energy to when the reversal happens, right? For example, right? So, and then the other mistake people make is that all of a sudden they did their inner work and they feel good, they're exercising. All right, guys, I'm ready to trade. And then the market is just not in a good place to trade. So it's a common, right? So it's like you could be in a good state, but there's no opportunity cycle. You could be in a bad state and there is an opportunity cycle. So what should you do in each situation? If you're in a bad state and there's no opportunity cycle, you don't trade. If you're in a bad state and there is an opportunity cycle, you don't trade. Right? If you're in a good state and there is no opportunity cycle, you don't trade. If you're in a good state and there is an opportunity cycle, you definitely trade. So you can see how what I just did by that example is I showed that it's not the opportunity cycle that is the ultimate arbiter to execution. It is primarily your state of being. That's what matters. So as I'm wrapping up here, we'll keep this one short and sweet. No one's on the call today. We're looking at the Bitcoin time cycle here. And remember, right? This came down, went sideways, then it hit it. This thing might come down, go sideways, and then hit this, right? The next week, right? That would be nice if we get some type of reaction here, right? And, Bitcoin one top, triple top, right? And then this was September 29th. We got to be vigilant. We got to take strength, take profits on strength, take profits on strength, take profits on strength. There is absolutely no reason not to take profits on strength. So let me leave you with that we have to take profits on strength. We have to do the counterintuitive thing. We have to leave all the hopium, the speculative huddlers behind, and we have to transcend their bullshit and do the right thing, which is follow correct process, right? If we're lucky, this might happen. But remember, this chart doesn't have to mean anything. It just takes one whale, one decision, one war, and then the whole context changes. There's no guarantee in this. That's the only guarantee I can tell you and I can leave you with. So, um, with that, I'll keep this one short. I'll keep this one simple, and I'll be here to answer any questions in the chat for later on. Take care.